Welcome back to my channel where I talk about cryptocurrencies and how you can generate massive profit from the crypto market. My aim is that subscribers to my channel get premium information on how to make money from the crypto market and how they can uh, make a lot of profit trading, investing, and doing other crypto things that can make them money. My name is Mohammed Salaudin, popularly known as Arab the Plug. If you are new to this channel and you are just watching my video for the first time, don't forget to subscribe to my channel so that you get premium information about cryptocurrencies whenever I drop them. And if you are a returning subscriber or even if you are a new subscriber too, don't forget to click on the ring button so that you get notified whenever I drop a new video. And also don't forget to like my video. Thank you very much as you do this. So in this video, I'll be showing you some of the reasons why your cryptocurrency portfolio is not what you dream of. What happens in the crypto market is that we have a lot of people who get into the crypto market on a daily basis, to be sincere. People get into the crypto market on a daily basis, to be sincere, and we only have few people out of millions who are in the crypto market who make profitable trades. And this video is not restricted to trading alone. We have a lot of uh, ways by which you can make money from the crypto market. One of them is trading, the other one is investing, buying and selling crypto assets, accepting payment in cryptocurrency, and things like that. So, there are some factors that affect whatever you choose to do in the crypto market. And some of these factors are what I'm going to talk about in this video. And I have decided to highlight 6 things, 6 reasons why people are not making money from the crypto market, or why people make money from the market and end up losing the money back to the crypto market. So let's start. Yeah, the first reason why you are not making a lot of money from the crypto market, or why your cryptocurrency portfolio is not what you dream of, is because you do not have enough knowledge of the cryptocurrency space before getting into it. That's the first reason highlighted on my screen. Not having enough knowledge of the cryptocurrency space before getting into it. Many people make mistakes of not taking their time to seek premium knowledge about cryptocurrency before they start. Let's say, for example, they have their friend who talk about Bitcoin, how Bitcoin has increased in price, how we have experienced a massive pump, dip, and things like that. So when they see these things, they get interested and they jump into it. Hey, my friend, hey, Mohammed, how can I buy Bitcoin? And they buy and they end up losing their money by selling at loss. This is an example of how people end up losing money just because they do not have the knowledge. For example, when Bitcoin came up to $65,000, I had a lot of people asking me, hey, Arab, I want to buy Bitcoin. They wanted to buy at that particular time because they got information that the price was already at $65,000. So when the price came down to $30,000 just recently, they sold. And guess what? They sold at a lot of loss just because they do not have the knowledge, the required knowledge. And this is not restricted to crypto only. No, there is no business you would do in the world that you will not require having enough knowledge of it before you get into it. Let's say, for example, you want to be a barber. You can never have a barbering shop, a barbering salon, a barbering of office space and expect customers to patronize you if you have not undergone a certain training for a certain period of time that will qualify you as a barber. Same thing applies to cryptocurrency market. The market is very volatile. You can't afford to get in without knowledge and lose your money. So what I have here is that cryptocurrency, like every other business or anything you want to venture, it requires that you learn about it before getting into it. It is very important. crypto requires that you learn about it before you start doing it at all. So if you are in crypto market today, if you are doing anything crypto related today, and you do not have enough knowledge of that niche of crypto you are doing, whether you are a trader, you are an investor, whether you do buying and selling, whether you make money through airdrops, whether you are into blockchain technology, crypto projects, no matter what you do in the crypto market, make sure you have enough knowledge of it. And when we say you have enough knowledge, you must strive hard to acquire knowledge so that you will be an authority in it. And when you are an authority in a particular field, whatever you say, you will be very sure that you are going to make money from it and let others who are listening to you or who are learning from you make money from it. And what is the goal of getting into crypto? The end goal is to make money. So if you are in the crypto market today and you do not have enough knowledge, you should try as much as possible to get premium knowledge about the crypto space. This is the first reason why many people who are watching this video, or many people who are in the crypto market today, are not having enough profit, or they are either making more loss than the profit they make in the crypto market. The next thing I would like to talk about is the second reason why your cryptocurrency portfolio is not what you dream about, is lack of adequate research about projects before buying or investing in them. There is something in the crypto market we call FOMO. FOMO. You can see it. FOMO. We call it FOMO. It means fear of missing out. This thing happens to a lot of people in the crypto space. They see that people are talking about a particular crypto asset, and they feel they also have to make money. They also need to make money from that asset, and they jump into it without making adequate research about that asset. And that is one of the things FOMO causes. FOMO causes for crypto enthusiasts and traders all around the world. You see people talking about Dogecoin. Dogecoin is pumping. Dogecoin here, Dogecoin. You get on your Twitter. You see people talking about Dogecoin. On your Instagram, people are talking about Dogecoin. On TikTok, on WhatsApp. Are you, wow, this Dogecoin of a thing must be a great project. Then the next thing you do is, boom, buy Dogecoin. That's what they call FOMO. And that is one of the reasons why your cryptocurrency portfolio isn't what you dream of. Because you don't make adequate research, enough research, before investing or buying any cryptocurrency. So I'll tell you right from today, always make sure you make enough research about any crypto project, any crypto asset you want to buy or invest in. That is a very important thing that you should do when investing or buying any cryptocurrency. So let me take you through this. Before dipping into buying or investing in any crypto asset, there are certain questions you have to ask yourself. You have to ask yourself about the functionality of that crypto asset. Does this coin has any practical use in the real world? Yeah, you have to ask yourself, what practical use is this coin going to bring about in the real world? Let's say, for example, let's go to the coin market cap. Coin market cap is a particular platform where you make research about cryptocurrency assets and do your fundamental analysis and get premium information about crypto assets. Let's look at Bitcoin. Yeah, Bitcoin, for example. You can always get information about Bitcoin. Let's look at the Bitcoin white paper. Yes, that's where I'm going. Bitcoin white paper. Good. So this is the Bitcoin white paper made by Satoshi Nakamoto. The Bitcoin white paper says a peer-to-peer electronic cash system. This is the major problem Bitcoin has come to solve. This is the major problem Bitcoin. This is the major reason why Satoshi Nakamoto created Bitcoin. So before you buy any crypto assets, one of the things you have to know is that you have to know the functionality of that asset. What has it come to do? What problem has it come to solve in the real world? If the assets you want to buy or invest in has not come to solve any problem in the real world, then don't buy it. The second thing you have to look into when we talk about uh, research about a crypto asset you want to buy is the technology. Does the crypto company have a solution that will benefit the mainstream adoption? Yes, when people adopt it, what solution is it going to bring about in the technological space? And when you look at Bitcoin, yeah, fine, Bitcoin brings a solution to the tech because today, today, through the internet, you transfer money, a large amount of money, to any place in the world through your cryptocurrency wallet, through the internet, through technology, and they get to wherever you are sending them to. That is another thing you have to take into consideration when you are making a research about a crypto asset you want to invest in. The third thing is the community. Yes, it is very important. It is very important about any crypto project. Any crypto project that does not have a solid community behind it should not be invested in, because it is the community, it is the group of people who form the community that will push the assets into the mainstream world and make people want to invest in it. And today, in the crypto space today, you see there are a lot of crypto communities on Telegram, on Twitter, but specifically there are a lot of them on Telegram. You see crypto communities with more than 1 million uh, subscribers, 1 million members. Then you have to ask yourself, does the cryptocurrency asset already have a large following and an active community supporting it? If a crypto asset does not have an active community supporting it, then you have no business buying or investing in that crypto asset. Because what's the essence of only having an asset that only 1,000 people want to invest in? What's the point? If only 1,000 people want to invest in an asset, then the asset is not really solving a real problem in the world or in the crypto space. If the asset is solving a real problem, a lot of people should be interested in it. And when a crypto asset has a community, members of the community push this asset. And when others see it, they see the functionality, they see the technology through the community. So no matter how good a project it is, if it does not have a solid community, an active community, then you don't have a business investing in that cryptocurrency. It's like saying you are opening a company and you don't have people who are going to push the sales. How are people going to see the product of that company? How are they going to see the service you render? How are they going to see the goods you sell? So that is the importance of community. Community is very, very important in cryptocurrency, and we crypto traders, we don't joke with community. So when you are making research about a crypto asset, make sure you look whether it has a large following and a very active community that is supporting it. The next thing you want to look at when you are making a research about a crypto asset is governance. Is the company legitimate? Is the company because in this crypto space, there are a lot of companies that are not legitimate. There are a lot of projects that are brought about to scam people. So you have to be sure if the company is legitimate and trustworthy. Then the last but not the least, what I have here is marketability. Is the product commercial, and does it have any real value that will benefit end users? Because there is no see there is no benefit investing in an asset that does not have any benefit. It's like going to the market and buying a phone that is not working. What you do with a phone that's not working? You understand? That's the concept. Every crypto asset has eh, a problem it has to solve. Every crypto asset must have, let me use that word. Every crypto asset must have a problem it has come to solve. So that is very important. Then the golden rule is that if you are in doubt, leave it out. If you apply all the things I have mentioned here, if you check the functionality, you check the technology, you check the community, you check the governance, you check the marketability, and you are in doubt about any of these, then leave it out. It is not a good project. It is not something you should be putting your money into. So, like I said, the second reason why your crypto portfolio is not growing like you want it to grow is because you do not do adequate research about crypto projects before buying or investing in them. The third reason why your crypto asset, your cryptocurrency wallet or portfolio is not growing like you want it to grow is because of lack of diversification in trading and investment. People usually say this particular word: don't put all your eggs in one basket. Don't get tied to any crypto asset. You are in the market to make money. Follow the money. Go to look for project that will give you money. If you are investing in a particular project and you notice that that project is not going to give you money, dump it. The crypto market is not owned by any individual. Yeah, crypto market is not owned by an individual, and you should not be attached to a particular cryptocurrency asset. Don't say this particular coin, I must get involved in it by all means, whether it is making profit or not. No, that is not crypto. Crypto is that you find projects that can solve problems, that can make you profit, and you invest in them. You should not put all your eggs in one basket. Yes, I said that earlier, and that is why you need to learn to diversify your portfolio. I have highlighted some things, some strategies you can use to diversify your portfolio here. The first thing I mentioned here is buy cryptocurrencies with different use cases. I mentioned something like use cases. A crypto asset you want to invest in must have a use case. It must be useful to the real world. So don't look for just one use case and buy all your cryptos. Like don't restrict all the cryptos you want to buy into just one use case. Buy cryptocurrencies with different use cases. And when you talk about use cases, I would like to give you examples of some use cases in the crypto market. So let's say 5 use cases of the cryptocurrency. Many cryptocurrency can be used for applications. Yeah, some can be used for applications. Some can be used for paying for goods and services. Something like Bitcoin. Ethereum is a decentralized network for application and smart contract. That's the problem Ethereum has come to solve. IOTA, connecting services and resources in the IoT. That's another use case. These are some of the use cases. Some cryptocurrencies are stable coins. What they have come to do is that they act in form of the US dollar. They give you they let you save your money in something look like the fiat currency, but it is originally crypto. Yeah, it is crypto, but it looks like the fiat currency, and you'll be able to save your money in a stable coin that has nothing to do with increasing in value or decreasing in value over the years. So some cryptocurrencies are smart contracts, some are access to finance, some are of internet, some are digitized metal. So you don't say I only want to invest in smart contracts. No, you have to invest in cryptocurrencies with different use cases. Invest in different crypto blockchain. Yes, look for different crypto blockchains and invest in them. Invest in different industries. Don't say I'm only investing in the NFTs industry or in the smart contract or something like that. Branch out to different crypto asset classes. Yeah. Fourth reason why your cryptocurrency portfolio is not looking like what you dream of, is not growing, is because you are not securing an asset properly. This is a very important thing in crypto. Secure your assets properly. How do you secure your assets? I'll tell you here. Whether your portfolio is 1,000, 100,000, $1 million, $50 million, $1 billion, make sure you secure your asset properly. Try to use a unique password. Use a password that people cannot guess easily. Password that you don't use on other websites. Never show your private keys. Some crypto wallets have private keys, mostly decentralized exchanges and some wallets, they have private keys. Don't ever let your private keys get lost. Secure them properly. Don't reveal them to anyone. Store them in a safe and secure place. Enable 2FA, two-factor authentication, which is a text message or a third-party app like, for example, my Binance wallet, if I want to send a crypto asset out of my wallet, I will get three different verifications. One is through the Google Authenticator, others through email and phone number. So make sure your wallet is secure. It is very important. Then there is another reason, the last but not the least, the fifth reason why your crypto portfolio isn't what you dream of is because you lack proper risk management. Cryptocurrency market is volatile. You have to know that the crypto market is volatile. See, you can easily lose millions of dollars in the crypto market if you are not careful. The market is volatile. Risk management is the most crucial part of crypto trading because the crypto industry is pretty new. Yeah, the industry is new. Just Bitcoin was launched in 2008. Still very new, less than 20 years. And you have to be very careful when selecting cryptocurrency to trade. The lack of regulation in the industry makes it more vulnerable in comparison with traditional stock trading. Yeah, because when you talk of stocks trading, you talk of forex, those industries have been for hundreds of years. They have been in existence for a very long time compared to crypto, and cryptocurrency industry is still being worked on. You understand? So you have to be mindful of the risk, and you have to apply some strategies to make sure you manage your risk properly. These are some of the things you have to look into. You have to look into the operational risk aspect, the risks involved with the operation, and that is what I mentioned, that the crypto market is still new. You have to be very careful because the way it operates, it is not like the stock market where there are regulations, there are strong regulations put out by the government or whoever is in charge of that market. You understand? So the way it operates, it is not regulated, fully regulated. Then you have to be mindful of the technical risk. When you are doing your analysis, you have to be very careful. You have to combine different factors. Not that you say, I'm only going to trade with indicators, and you trade with only with, you may make money in some trades and you end up losing more than you make. If you trade, if you only go with indicators when trading the crypto market, for example, if you trade 10 times only with indicators without combining other factors, you are going to lose 8 or 9 out of the 10 because you have to be wary of the risk. You have to combine different factors together when you are doing your analysis to make sure you have a profitable trading strategy. Position sizing, yeah. If you are trading, I usually advise in my private group where I host traders and give them signal, give them trade setups, and teach them how to trade. I usually advise them that they don't trade with more than 10% of their capital. If you're entering a trade, don't trade with more than 10% of your capital. The moment you let greed set in and you start trading with, let's say, 50% of your capital, if you lose out on that trade, then you lose out on 50% of your money. That is too risky. If you lose out on a trade that is just 10% of your capital or less, then you know you have a higher chance of recovering that amount you've lost. But if you put all your eggs in a trade, you put all your money in a trade and you lose it, then that's a lot of problem. So be wary of position sizing. Then the next thing you want to take note when it comes to risk management is stop loss and take profit. Always use stop loss. Always use stop loss. Stop loss helps you to minimize your loss. It means that if your analysis go wrong, you are going to be stopped out of the trade very early, such that you don't lose a lot of money. And you have to learn very much how to place your stop loss. Then you must learn to take profit too. The market does not belong to you. Take profits. Take profits. Take profit reasonably, because there is no 100% guarantee in the market. Then you have to have something we call risk to reward ratio. It does not make sense that you are trading with $10 just to make only let's say, for example, it doesn't make sense that you are trading $1,000 just to make just $1. No, because you must be able to make more reward. Then you have to be looking at more reward when trading, and then you have to put in a little risk. Let's say, for example, you want to buy an asset at $20, for example. This is just an example. You want to buy an asset at $20 and you are looking to sell it at $25. You must be wary of that. You want to make more money, but you must put your stop loss at least 19. I'm just using this as an example. I'm not giving you something to trade with. But then, if you want to make like $5, you must not be willing to lose more than $1. That's just an example. So it is very important that you know how to manage risk and reward. And that is that about lack of proper risk management. The sixth and the last reason I have here on why your crypto portfolio isn't what you dream of is because when you just get started learning cryptocurrency, you want to jump into leverage trading. You see people talking about future trading, and you want to jump in. You are a newbie. You are a newcomer to the market. You are new to the market and you want to trade futures. No, it's not done that way. It's not done that way. It's like saying you are just a part one student of law school and you want to go to the chambers and represent someone. No, it's not done that way. Leverage trading or margin is a high risk and reward trading strategy that allows you to amplify engagement by using your asset as collateral. What you do in crypto, in margin trading or leverage trading or future trading or whatever you call it, is that you are leveraging your asset as a collateral to borrow money from the market to make profits. You are using your money as a collateral. Your money, when you are trading, you are on a margin trade or a futures trading, your assets, your capital in that trade will be used as a collateral. It will be with the system. Then it's like you are borrowing money with the leverage you are putting. The leverage determines how much you are borrowing, and that will determine how much profit you are making or loss. So leverage, experienced traders are the ones that can make a lot of profit from. If you are a newbie, don't get into futures trading yet. Gather a lot of experience from spot trading, gather a lot of experience, gather a lot of knowledge before you get into the crypto market. So what I have here is that I would recommend that you avoid leverage trading until you have a better understanding of regular spot trading and market fluctuation in general. That is uh, a very good advice. So in conclusion, the crypto market is unique and it's an exciting place to be. Yes, many of us make a lot of money from the crypto market. It's exciting. It's unique. There is no market like crypto, for real, for real. There are a lot of opportunities every day to make money if you know what you are doing. Yes, that's another thing. It is important to be sure you are not losing money due to avoiding mistakes. I have highlighted 6 mistakes, 6 reasons why people are not making money. Make sure you watch this video very well. You put down these things and make sure you implement them in your trading. And if you are a new subscriber, you're just watching my video, make sure you subscribe to my channel. If you have already subscribed, make sure you like this video and click on the bell button so that you get notified whenever I drop a video. I wish you a good sojourn and a profitable trading in the crypto markets.